And we've got a new sponsor today. We've got Zack Brittain from Waterloo joining us.
We're going to take you through everything you need to know kind of about myself, my partner, my team, and the Waterloo region in general. This will be a really good starting point for anybody that really doesn't know a ton about our area. Last 10 years has been ridiculous. Like, guys, if you're expecting 30% return on your real estate, you're out of your mind. Like, this is absurd. Do not expect this. Do not expect this to keep happening. Breaking news. This is Derek, our in-house correspondent. Oh, from Good Morning KW. Wow. Inventory is still low, Matt.
Yeah.
Like, disgustingly low. It is super important to be able to move quickly. Super, super important to be able to move quickly, especially in low supply markets. If properties aren't available and you see one that is available that fits your profile, then you have to be able to move on it.
What is up, YouTube? Matt McKeever here, and we've got a new sponsor today. We've got Zack Brittain from Waterloo joining us. So we're going to be jumping into the Waterloo market in general. We'll also talk about recent sales from September. And Zack's actually, you're a bit of an investor yourself, right?
Correct. We've been in business about 5 years here in Waterloo region and really started to see some growth in our personal portfolio and with our clients last couple of years. Been a good market, so been taking advantage of it.
Awesome. Well, looking forward to finding out about what's going on in the Waterloo market, but I know you've got kind of a summary for us to jump into at the start here.
Yeah, we're going to take you through everything you need to know kind of about myself, my partner, my team, and the Waterloo region in general. This will be a really good starting point for anybody that really doesn't know a ton about our area or a ton about, obviously us. So we're excited to introduce ourselves to the channel and let you know what we know about Waterloo.
All right, let's jump into it.
Awesome. So Phipps Brittain Real Estate, baby. New brand just launched. Like I said, we've been in business 5 years, so really excited to kind of get all of our new material out there. Represents us a little bit better. Just what we'll cover today. So Matt and everybody else, since you don't know us, since you don't know our business, I don't want to make any assumptions about what people know about Waterloo region. We're going to cover a lot of the basics, and then we'll go a little bit deeper into what the last month or so has looked like, as well as what we kind of expect for the rest of the year. I think obviously it's impossible to predict things, but giving our honest opinion and some valid reasoning and data behind where we think the market's going to go, I think is super valuable to obviously investors and anybody else looking to get involved in our area. So two handsome devils right here. Zack Brittain, Matt Phipps. Wow, we look great. So myself first, again, I was raised in Kitchener, right? Like, I was a downtown kid. I did all my schooling in Kitchener. I did my schooling at Conestoga for a couple of years, international business, and then did economics and finance. Thought I wanted to get into banking and finance, and realized when I got in that business, it just, the 9 to 5, Monday to Friday just wasn't for me. So my partner, Matt, I actually lived with him in college. He convinced me to get into real estate. He was doing renovations and trades and was like, well, I think I can flip a couple properties, and hey, we might be joining a real estate team, and, they're pretty serious people. So he kind of dragged me over into real estate here in Kitchener-Waterloo. This was about 5-6 years ago, right? So Matt, has the experience in the trades. He had early home ownership experience. Once he started selling a little bit more, we started reinvesting a lot more of our money into, smaller flips, a couple duplex conversions, because those started getting really popular and profitable in Waterloo region. So that's kind of like how we originally started, thinking, okay, well, we can sell at pretty high level. And then maybe, since we know the market and we have a little bit of experience, we see what the value is in real estate. We can really kind of drive some of our, wealth and some of our own business in that direction. And the Waterloo region, as we're going to see, has just kind of really exploded since we've been in the business. So it's been quite an advantageous time for us, right?
Yeah, absolutely.
And you guys will get to know us a little bit more as we're on a little bit more here. But just to go really brief, our business, we work with buyers, sellers, and investors, a traditional, full service, realtor. Between myself and my partner, Matt, we're doing 50 to 60 transactions a year, which is enough to be good enough to know the market at all times. I found sometimes if you have a slow month or two, you're really out of touch because our markets are moving really quick. When we first started, a lot of buyers, first-time buyers, maybe your upsizers, right? Some people get into the pre-con game as well because that's really blowing up in Waterloo region. And then your traditional sellers. And, a lot of our sellers are, they're looking for upsizes, or they're selling to invest actually because they've made tons of money on their primary residence or on maybe a secondary property. And then as our business has grown and as ours has really matured, a lot of our personal stuff has gone into investors, and our friends and family and past clients have seen our success, and then they followed, right? They see, us pull off a couple really good flips or a couple conversions or a couple larger multi-units. They see that the numbers are there, then they can also, have that confidence to make that move too. And a big part of our business has been networking and looking at bigger projects, things like your garden suites that are now able to happen in Waterloo region, how to build and add additions, rezoning that has allowed for, more dense units in the downtown core and other areas of Waterloo region. And that's been a big part of our business outside of just working with clients, and doing things like this to meet new people and meet other people that would, add and complement our business, making sure that, we know what the opportunities are like in our market. So that's become a big part of our business now that we're investing a lot more heavily in our local market.
Yeah, I appreciate you sharing that. And I think, over the last, let's call it 10 years, as the Waterloo and Kitchener markets kind of matured and we've really seen the prices increase, a lot of those infill projects trying to squeeze more living space or an additional units, a huge value add compared to maybe like 15 years ago when prices were a little bit more reasonable and people would just go look to gobble up real estate. Now it's really coming down to bringing that piece of property up to its highest, best, most efficient use. Yeah,
very similar from my knowledge of the London market. Quite similar in the sense of how they're really trying to densify and what they're really looking to do. I mean, older cities that are really growing like crazy, they're going to have to come up with ways to really, make space for people. And that's become a huge challenge. And we'll get to kind of how the geography fits into that in Waterloo region when I kind of just explain a little bit more about how weird this area really is geographically. Old cities, man, they cause some problems. So it's a big part, especially in Kitchener, because Kitchener has heritage districts as well. And they have a lot of the major infrastructure coming into the Waterloo region is coming either in or through Kitchener. So it's become a, not necessarily a problem. It has become a problem, but creates kind of a more unique opportunity. It's a little more specific type of projects that we're looking for there. So our markets, big ones are Kitchener, Waterloo, and Cambridge. Wilmot, Woolwich, Wellesley, North Dumfries. Those are smaller hamlets and kind of districts outside of the city cores. Just to touch on that really briefly, traditionally people would move to areas in Wilmot and these outskirts to chase prices, right? You used to be able to get a lot better value. You could get, move from your townhouse in town to a detached outside of town, maybe 20-minute drive for a comparable price. But those prices are converging, right? The price difference of what you can get in a smaller town or hamlet within, maybe 10, 15, 20-minute drive of Kitchener Waterloo is like very minimal. And the volume of availability out there and the variance in price, we get a lot of inquiries from people looking for a little bit of land outside of town. It's just not available. People will pay a premium. You'll have somebody that wants to have a nice single family home out there. They'll just buy the lot because it's a 20-minute drive to their office or 20-minute drive to the kid's school and go do whatever the heck they want with it. There's no bargain hunting for those types of properties anymore. They're too rare. So, and for the sake of our presentations, the majority of our information is going to be on Kitchener Waterloo. The Cambridge market is a little bit of a different beast. We do cover it. About 25% of our business is in Cambridge every year. But Kitchener Waterloo and Cambridge are two different boards. And the Cambridge board is virtually identical in terms of the average stats. They pretty much follow each other identically. They're three old cities that grew into each other, right?
Yeah.
So we'll cover that right here. This is kind of just a quick overview. Kitchener obviously takes up the majority of the geographic space. It's a little bit bigger than Waterloo in terms of the sprawl. Waterloo's got, your Laurier and your UW University. Kitchener's got your downtown core that's got the GO Transit and the VIA, and then it's got the 401 that goes through it that connects the city of Cambridge. I don't know if you spent a ton of time in Kitchener Waterloo, but if anybody has or anybody's been through the city a few times, it is insanely confusing. It is an old city, and Cambridge is three old cities that have grown into each other. So if you're trying to look at it on the map or drive through it, very understandable if people are getting confused about this area because it's century-old cities that have grown into each other and had to become modern. They don't really make a ton of geographical sense. But what I wanted to highlight here was Kitchener is off the 401. The majority of our personal investing comes out of Kitchener that's not the only reason, but one of the main reasons is where it's growing and the opportunity it has. offers some advantages, especially as trends are changing here in the area. A lot of people come into Waterloo region because it's close, right? Mm-hmm. You guys are getting a lot of fall off from our area as well, and a lot of people from the GT as well down in the London area. So, people have been saying that for 20 years, but now that it's actually really happening, you can start to really see it, in real time.
Absolutely. And as we see like more pressure or more open opportunities towards telecommuting or, virtually commuting to the office, again, markets like Kitchener and Cambridge being close to the 401 that you can zip if you have to every now and then into the GTA. But there's a lot of opportunities, I think, down the road.
You see a lot of that, especially in Cambridge. A lot of pre-construction, a lot of new build homes, townhouse complexes, detached homes, all on the north side of Cambridge. Saves about a 20-minute drive to the GTA, and as well on the southeast side of Kitchener, right off the 401. It saves you, that extra 10 or 20 minutes as opposed to living in the middle of the city or out in Waterloo.
Yeah.
So a lot of people will move out to Waterloo because they can go anywhere between Kitchener, Waterloo, Cambridge in 25 minutes. But if they're commuting to the GTA, people that are coming into the cities are preferring Cambridge and Kitchener for that.
Mm-hmm.
Right. Our markets just in general, about 610,000 people in Waterloo region. We're increasing by anywhere about 5 to 10K people a year. And I can supply links on all this stuff. There's a couple good local resources for this. Data is actually super easy to find for anybody that wants it. So we'll supply links for all this stuff. Medium household income, about 85K. A lot of manufacturing in our area too. Just to kind of give a quick market profile, we used to have a ton of manufacturing in Waterloo region. A lot of that's shifting to education, healthcare, and then professional and technical services. Have a big tech hub here. A lot of investment coming in our area. And again, we'll touch on that stuff as we talk about what type of profile properties we look for and what we like in specific areas for these types of things. But just so people have a general idea of what's happening, we got two big hospitals, 3 big schools, a lot of tech investment, and a lot of banking and insurance as well. That'll start to die down a little bit as they start outsourcing, but pretty decent mix here in the area.
Mm-hmm.
And then general notes, 3 growing post-secondary institutions. Just a quick note on that. Conestoga College just reached just over 50% of their students are international students. They also just took campus space in downtown Kitchener. UW and Laurier are expanding. They got Brantford as well. They have some satellite spots in the GTA. And they are all expanding in Waterloo region. I challenge any listener who hasn't in a while, go look at the map of Waterloo region and look at how big the University of Waterloo's campus is.
Mm-hmm.
It is mind-boggling, shocking how massive it is. It's a separate city on its own, and people have been talking about UW forever. But the reality is, when you have this many people coming to such a highly touted school, and they are showing signs of growing, natural spill off in our area is only natural. Same with Western down your way. Same with any of the big schools in Ontario as they gain notoriety and continue to pump out a lot of talent. A lot of the investment in our area is supported by these young people that are getting educated and coming out of school with decent jobs, right? Mm-hmm. So that just further goes into our tech and our business development. And then that supports the expansion for transportation. I mean, anybody's driven through our area in the 401, they've noticed it's been under construction since forever. It'll continue to be expanded. The Ion Rail, for those of you that don't know, a rail transit that goes through Kitchener and Waterloo to connect the two cities. We're not going to, kind of controversial for taxpayers in the area, but we won't go into that. If you're a city planner or you're looking at any, let's say, region plans, if you're within a 1 kilometer radius of a major Ion stop, you're doing great. You're doing great. That's going to appreciate probably a little bit better than if you were further away. So future real estate investors or current real estate investors, hold on to those bad boys. And then GO train. So I think COVID-19 just kind of accelerated the growth of people working satellite and only having to go into work maybe once or twice a week or once or twice a month. They're looking to expand, and they already have expanded, GO transit to our area. So commuters welcome. Come on down, guys. And then zoning and redevelopment changes. Like we talked about off the top, Matt, we've had a lot of those changes, especially because our city's older and because a lot of the downtown cores have some unique challenges. Industrial mixed use areas mixed in with, high traffic or low traffic residential areas. So they need to switch up some of their zoning so people can come and either redevelop or completely redo specific areas to include more units. right? We're going to start seeing a lot more high rises. If you drive around Waterloo region, especially in downtown and uptown, you'll see signs saying, no high rise buildings, a lot of people conflicting about what's really going to be happening. And the reality is, we're going to start building up. We've already started to see it, right?
Yep.
So overall, if I could summarize Waterloo region, Cambridge is 3 older cities that grew into each other. Kitchener, 1 big super old city. Waterloo, another old city that's got a bunch of the schools and is kind of growing away from the 401. There you go.
Yeah, I appreciate the summary.
Right. So what I wanted to cover in this first one was just an overview. If people have been kind of living under a rock or haven't seen any of your stuff before, really what's a 10-year, 5-year, and kind of the year-to-date looking like in our market. And then we'll get deep on the September 21. And afterwards, obviously, just talk about what I think is going to be happening for the rest of the year. Okay.
Perfect.
Just want to start off with this, guys. It's like, I'm going to beat this drum just like a few of the other people that have been on the channel, especially people on some of the outskirts markets outside of the GTA. Last 10 years has been ridiculous. So right about where we see the 369K, that's actually about where I got in the market. That's where I became fully licensed. I'd been working in real estate for about 6 months before I got my license, doing a little bit of everything. And that was like the first year that prices were like, whoa. That's the first time you saw like a $50,000 over asking offer, right? Like people were like, holy crap, this is crazy. So, myself and my team were going around asking people that had been through crazy markets before, trying to figure out how to navigate that. And they were like, yeah, don't worry, a year or two and it'll be gone tops. And as you can see, we've seen pretty aggressive growth ever since that, 2015, 2016 bump. Right. So, in 2011, 2012, we're looking at 273,000 for the average price of a property. And it only goes up to 369 in that 5-year window. The next 5-year window, it doubles.
Yeah.
It's aggressive. It's aggressive as hell for real estate prices to be going up like this. So a lot of questions and a lot of our strategy is going to surround how to navigate through really aggressive markets without losing your shirt, which I think is kind of a key to that part of that statement, is without losing your shirt, guys. So I just want to highlight the 2 big jumps, in 2017 to middle of 2018, jumped huge again, but came back down. Pretty calm for a year or so. And then, during COVID, like I've seen on some of the other guys' presentations as well. I don't know about you, but I thought we were going to be super slow that year. I was finishing a couple renovation projects, right? Had a couple projects on the go, a couple sales, a couple purchases with clients. And I was like, we're done for the year. Like, nobody's moving. If you leave your house, you're going to die. So nobody wants to buy or sell a house, right? And then it just went the complete opposite way, and it hasn't stopped since.
Yeah, it's been wild in most Ontario markets, and actually most of Canada's real estate markets. That August 2020, it just never looked back after it heated up kind of late summer. And when we look at months of supply on just about any real estate board, it's near all-time lows. So again, it's interesting to see us be this high in price and yet still have such a low level of inventory, because there doesn't seem to be an immediate catalyst to drive prices down.
No, and I think me and you are going to have that conversation on this one, and I probably pretty much every other presentation until something actually changes. But I think it's very comparable to some of the other markets. And correct me if I'm wrong, but like most of the other people that we've had on are mirroring a very similar price growth in their market. Pretty slow and steady until 2016-ish, maybe a big bump up, and then a really big bump up in 2020.
Yeah, 100%. I think the bump in 2016, 2017 was more significant in GTA and directly adjacent markets. But then since, 2020, everything's been on fire. literally,
right? So Kitchener Waterloo, 10-year growth, 187%, 5-year over 112. Year over year is what I really just want to focus on here. Like, guys, if you're expecting 30% return on your real estate, you're out of your mind. Like, this is absurd. Like, and this is coming from somebody who's directly benefited from it, because I hold units as well. But like, fantastic. If you're holding units, great. If you're expecting this to continue to happen, then I think you just got to kind of readjust your expectations and really look at what's going on here, right? And just to even highlight again, like a month return, 1.2% in a month in real estate is nuts. Like when we run our models, we're looking at 2, maybe 3% a year. That's what we're banking on. If you can be making money on a deal and you're making 2 to 3% appreciation, we don't even bank for appreciation. That's the benchmark we use for some of our models. But this is, and just to be clear, this is against all property types. If you're looking at just freeholds, if you're looking at multi-units, if you're looking at, towns and condos, it'd be a little different. But like, these growth rates are insane, guys. Do not expect this. Do not expect this to keep happening.
Absolutely.
Right? Take it while you can, though. Take it while you can. So I think this is where me and you can open up the conversation a little bit, is the key growth factors. A lot of cheap lending, supply shortage. A big one with supply shortage, when I got in the business, I was like, oh, I got a degree in economics. I'm super smart. I can figure this out. Why don't we have enough supply and demand? That's all you freaking learn, right? Why don't we have enough units, and why can't we build them quick enough? And there's no like magic website or like, developer or government official that's like calling me back being like, hey, Zach, this is why. But I think the biggest part of it is it's more expensive to develop. There's fewer players that hold the majority of the land. There's shortage of materials, there's shortage of labor, and it's becoming more expensive. The reality is it's a finite resource that people already either have or can't get a hold of at a cheap enough price, and they can't turn it around quick enough because there's a lot of red tape. Right?
Yeah, exactly. And I think, again, it is as simple as looking at what is the replacement cost. And once you factor in all those different fees and cost of labor and material, you end up realizing that replacement cost is often still like the current inventory on market. It makes sense kind of where we're pricing things at. So yeah, unless we see significant changes, like our replacement cost is always going to stay as high as it is. It seems very difficult to imagine it coming down significantly without like a novel technology breakthrough or something like that.
And that's the thing, unless they provide a framework, or somebody else comes out with like, hey, I can do this instead, and it makes sense for a livable space. I'm really skeptical on anybody that thinks the supply will be able to catch up in the short term anyway. It takes months and months, especially when we're as low as we are, for supply to really catch up. And a big thing just specific to Waterloo region and a lot of the surrounding markets is consumer changes. I think COVID-19 accelerated this. Is consumers don't have to be in specific areas anymore. Look, to work, you do not have to be in specific areas. So if you have an area that's fairly low crime, clean, has decent schools, has all your amenities, and you can live for 30% cheaper than you could in another market, a lot of people are going to come to that. A lot of people are going to move down further, even from Waterloo region. They'll move into areas and markets like London, because you can live a great lifestyle. You have everything you need. The city's big enough. And if you do have to go anywhere, you're a 2-hour drive from pretty much anything you need. Okay, that's livable to me. And that's livable to a lot of other people. Other things are employment and education, right? There's lots of work here. And there's a lot of people going to schools, college and universities. So a lot of people, even international, will come here. They'll complete a 2 or a 3-year diploma. Then they'll get full-time work and get their PR. And then boom, now their family can come over here. So we have a lot of people that are coming and staying in these areas. And that's the big key thing, is they're staying. If we had a bunch of people coming to school and then just leaving, then I feel like there'd be less investment in, let's say, your tech, your insurance, your banking, right? Your professional and IT services that are typically, earning your 60, 65K plus a year, right? And that just goes into the quality of life. Typically people, it's a fairly normal city. It's, got an old downtown that's getting redone a little bit more so than some other markets. It connects to uptown Waterloo, which is a little bit, more polished, a little bit more student living, a little bit more lively. And then you can pretty much get anywhere you want in Southern Ontario in 2 hours. Great. Yeah. And then geographic location, again, proximity to 401. You're close to Guelph. You're close to other smaller markets. You're close to, some beach towns as well, where people get their cottages and stuff. Pretty good mix, right? And I think we're going to get into the lending and the supply shortage a little bit more in some other videos as we kind of discuss some projects. So I give you guys some real life examples, right? This is just a price chart for last year, right? On the left side, you guys can see we're under 700K in 2020. Now you're high 9s for a freehold detached. Wild. A lot of people in our area, and what we may start to see is, and what I have seen is, people are just straight up priced out of our market, right? A lot of the people in the GTA are hovering a little bit above these prices. Your Mississauga markets, your Burlington markets, even more north and west of that as well. They're either at or above these levels, but like a lot of locals priced out of our market. we'll start to see the yellow and the gray line there. Those are the townhouse and the semi-detached. We'll see those continue to converge, right? In our market specifically, the difference between most semi-detached and most townhomes that are newer than 30 years old are very minimal. Virtually the same square footage. You get a little bit of yard space maybe. But in our experience and what we've kind of noticed is people aren't necessarily willing to pay the difference. They want something that's freehold and move-in ready. So they're gonna take whatever they can get for that. Where we do see a lot of big changes here is condos and freeholds are really exploding. Mainly because more condos are coming to market that are newer and fit more, recent consumer trends, and they're more central locations. Downtown and uptown condo projects that command a little bit of a premium. A lot of those projects are coming to market, and those are the ones that are selling for more money. They're either nicer, newer, better location, or all three. So that's why we're going to see a little bit more of a jump in the condo prices. So expect those to start to converge as well as buyers get priced out of a freehold. They'll go down to maybe a semi or a town. They get priced out of that. Boom, they'll go down to the condo. Even personally, like people I've grown up with or friends or referrals looking to buy their first place who passed about a year or two ago, they could have bought a detached or maybe, a really nice townhouse, and now they're forced to go into the condo market. We'll see a lot more of that.
Yeah, absolutely.
Right. Here's the basic price rundown so you guys can kind of see the numbers up front. Detached, 963, semis, 686, townhouse, 646. So about a 40K difference between a townhouse and a semi. If any of you guys are really considering it, I prefer the semi, but that's just me. For the extra 40K, you get a lot more yard space, typically a little bit more square footage. You only share one neighbor. And then condos, almost 500K. But in the small text right beside, the price growth, over 20% for each in the last year. Mm-hmm. Just take that into consideration. So a lot of people are doing their refining, right? If they're smart, or they're upsizing, they'll just use that as a, okay, well, I bumped up an extra 150, 200 grand. Let's go make that move. If I don't have to be in the city, we'll move out or we'll move to a bigger detached, get some different features. Upsizers are a fairly popular move right now, to be honest. Mm-hmm. Right. But as a local and someone who got into the business when prices were not like this, to see this type of growth in my first 5 years in the business is a little crazy.
Absolutely. And again, it is the facts on the ground. So I think it's important. Investors always are just dealing with what reality is. I know a lot of people wish prices were lower or wish we'd seen a pullback. And I can understand even why some people would expect it. But clearly right now, all the facts point towards like either prices stabilizing or continuing to have some pressure up.
Absolutely. And just to note from an investor mindset here, like when I was first 5 years ago, you could still get a townhouse and cash flow it. Right. That's what a lot of people were doing 10 years ago when townhouses started to get built a lot more in our market. They're like, awesome. We can pick up a pre-con townhouse for like 200 grand, maybe 250, put 20 points down on it. And I can cash flow that. Like that's, easy money. I'll keep it for 5 years. Once the term's up, either refi or sell it and go buy another. Great. Very common investment strategy 5 years ago. Now the single family play doesn't even exist. Like you cannot cash flow property unless you're putting a significantly higher down payment than 20%. The ratio for what you can get for the rental versus how much you're gonna be paying on your mortgage, even though financing's super cheap, you can't do it. So that's why we're seeing a lot of people, move into the garden suites, move into the duplex conversions, move into the smaller multi-units. And that's why we prefer Kitchener for investing is they're much more encouraging for investors and for people who are renovating and building to work within those smaller 2, 3, 4 unit spaces. And obviously we'll touch on that in the later of the presentation and for next month. But just to give a baseline, people, like detached homes are getting really expensive. They're getting really expensive here in the area. This is just for property type. Like I'm not a big proponent of like the volume of sales, but I thought it was super important to just kind of give a baseline and also just acknowledge like how many sales have actually happened. I know you've probably gotten this, and I know a lot of other realtors that you have in your network, and anybody else listening to this has either had this question or asked this question: is the market slowing down? And we've been in COVID for a year and a half now. Let's say our market has only sped up. We've only done a higher volume, and prices are going up associated with it. So our September volume was down. We had a pretty slow August as well. So just to see how many like units are actually changing hands. Whoa. Breaking news. This is Derek, our in-house correspondent. Oh, from Good Morning KW. Wow. Inventory is still low, Matt.
Yeah.
Like disgustingly low. So when we see a
Mhm.
high volume of sales, but inventory is super low, this isn't the only tell saying that it's like going to continue. But if we're setting record for a volume of sales this year. We're projected for the number of units that have sold in Waterloo region, but we are at the record low for the amount of units that are available on our market at any given time. This is just screaming at me that price pressure will either maintain or only push up. If we are selling more than we've ever sold before, but we still cannot build up any inventory, that is just screaming to me that we just can't bring units to market quick enough, and we cannot keep them there because buyer demand is strong, right? We are like below 3 weeks of inventory. If nothing else came up on our market, I would be out of homes to sell pretty much by the end of October.
Mm-hmm. Yeah, really appreciate you sharing this because, again, I think a lot of people, especially newer investors, get caught up in their emotions and they kind of want to overlook this fact. And this is a huge thing to be aware of that, again, even if we literally saw like demand drop in half for monthly sales going forward, we're still going to end up being in a seller's market.
Well, we're going to be in a seller's market for at least the next 3 to 6 months.
Mm-hmm.
Even if things started to change right now, it would take until probably January or February until we really started to see a little bit more of a balance come. And this is just to even stress that even further is even newer investors or even seasoned investors, it is super important to be able to move quickly. Super, super important to be able to move quickly, especially in low supply markets. If properties aren't available and you see one that is available that fits your profile, then you have to be able to move on it. That's like a big proponent for we're working even with a buyer that's taking a simple downsize or a first purchase. Like speed is super, super important. And we've had to learn that because if you don't move quickly, good stuff's gone, especially if you're looking on market stuff, even if off market stuff, anything good is gone.
Yeah,
like,
absolutely.
You gotta be on it, right? Average days on market, like we're at about 12 days. And that's like market wide. So just to take that a step further, guys, if you're looking at a freehold property, single family, super like in terms of like the simplest type of property, no condo, status certificate you have to review, right? So you're probably buying it unconditional. If you're buying properties in our market, people aren't using conditions, you're not using your finance or your inspection. So you don't have a 3 to 7 business day conditional period. Properties are listing, and they're on a day and they're taking offers the next week. They're selling in 7 to 8 days by the time they're firmed up. If you're buying a condo, let's say you have a 5-day status certificate inspection on it, then you're firmed up in 14 days tops.
Mm-hmm.
Tops. So like things are quick. It is intimidating as somebody who may be a newer investor or somebody that's not as experienced or been into the game for a while. We get that a lot. You feel that anxiety, that pressure because people have to really move quickly, but things are moving quick, guys. Really, really quick. In summary, supply is super low, Matt. Super low. Demand is super high, and units are selling really quickly. Straight up. That's about as succinctly as I can put it.
Yeah, no, really appreciate you breaking it down for us in simple terms. And again, highlighting the 10-year trends, because it can be really easy to think that, maybe if these high prices are from low volume, it's not something that's, going to kind of stabilize at that price point. But the more inventory we see turning over at this price point, the more likely we're going to see ourselves starting to really see it firm up at these all-time highs or close to it.
I agree. And I think a lot of people just get caught up, like you said, in the emotional side of things. Like, I'm a long-term investor. Like the thing that got me hooked on investing was my mom gave me the wealthy barber when I graduated high school because she thought I was going to leave and never come back to school.
Mm-hmm.
And I just realized you got to be investing for 10 years, 15 years, 20 years. Like if you don't have that mindset, your margin for error is so much bigger. Your benefits are much lower. So I just can't stress enough. Like, yes, this is great context for our market. Yes, it's really important to see it from like, okay, let's take a look back. We can look at it from a 10 years perspective, even longer, to gain that context. And I think context is important. But the reality is understanding exactly where you stand in our current market is important to make a decision now. Because at the end of the day, that is all good reference point. That is important. And, I come to that with that already inherently, in my consideration when I'm looking at properties for clients or for myself. But for new people looking at our market, please like check out some of the links for the resources to get an idea. If you don't know the area, contact a professional. If you are considering the area, it's important to understand why. And I think we'll get into like the types of deals that we've looked at and the types of investors that we've really worked with and what we found has worked with them. I think that's going to be a really good thing to cover in our next video. So I'll go through some of the finishing points really, really quick for this one. Inventory is going to play catch up, Matt. Everybody else, expect inventory to stay low. Seasonal trends are going to apply. We are in Ontario. We are in Canada. Most markets get a little bit quieter during the winter months, right? You're going to come into your December, your January, your mom and your pop aren't going to want to move during Christmas or during the winter. I get it. I also love shopping in the winter months. I think it's a great time to scoop up some deals from motivated sellers or maybe less experienced, sellers or agents. The majority of our deals, actually all of our deals for our personal investments have been on market in the last 4 years. So just to kind of show you, like, are able to find value on a competitive market if you know what you're doing. I do think seasonal trends will apply. Just a quick note, though, you've probably noticed in other markets and other agents and seasoned investors, COVID has kind of shifted the trends plus minus a month. I found that our spring market was a little late, right? Our summer market, it finished a little bit quick this year because everything was opening up. People were like, I don't know, like I'm going to take this first summer that I'm vaccinated or that everything's open, I'm done. We noticed that August was super, super slow. And I think that's a big part of it right now, why September's slow. Kids are back in school. I think some people are just a little bit resistant if they're seeing some more changes with more cases coming up, or they don't want to, bother moving with their kids now in school and everything kind of settled. People are feeling a little bit more safe. We're just seeing less inventory come up. And I think also really, really important to touch on economic factors. Look, I'm not an economist. I'm not giving financial advice to anybody here, but like interest rates and inflation are going to play a huge role in the coming years. We're already starting to see it affect equity markets, which I pay attention to a lot. And I think that is going to be a big catalyst that is going to, really cause some changes to our real estate markets long term. So I think that's going to be a really good conversation to bring up once more information starts to come up. But inflation's on the rise. Interest rates can't go anywhere else but up. At least I think so. So eventually those will play into, but for the rest of the year, if you're looking at Waterloo region, expect the exact same. Prices will be the same, maybe a little bit higher. Volume will likely stay pretty low.
Yeah, really appreciate you sharing that. And again, no one's got a crystal ball, but it is important to at least be thinking about these things and trying to position yourself, your investments, your portfolio to, weather any storms depending upon how you personally see them, right? When it comes to investing. Yeah,
we got to think ahead, baby. We got to think ahead. Now, I just kind of wanted to talk about a few things that we really look for in Waterloo region. So our experience has really fallen into some smaller flips, duplex conversions, triplex, fourplex, and smaller multi-unit plays. Since we've been in the business, the single family traditional buy and hold hasn't really cash flowed. So that type of deal doesn't really exist in our market. And I don't necessarily recommend it. I think there's better use of capital. If you're putting up enough money to make a single family cash flow, then you probably have enough capital to go do something that's more profitable. What type of properties offer value? I think these are great questions for our audience. If they either hold or are considering getting in our market, these are all super important to consider. But a lot of what we find is happening for successful investors is they're looking at their whole picture and they're looking at their long-term plan. We get a lot of people that say, Zach, like I need a deal under 650. I need a deal under $1 million. I'm looking at, and that's kind of all you get. And one of my first questions is always, okay, well, what's your goal with that deal? Because like what I think a good deal under 650 or what I think a good deal under $1 million or whatever it is could be totally different than what you think is a good deal or what is a good deal for you, for your portfolio or your goals. So I just think, I know that's a big thing on your channel with some of the other guys you've talked to and just you in general is setting goals and like really considering your whole picture will only improve how successful you'll be. I also think learning the rental market is super important unless you want to be a hands-off investor, which I also encourage. Property managers are great guys. One thing I love about my stock portfolio is it never calls me and tells me my toilet's leaky, right? I don't get those calls. Markets are closed in the evening and the weekends, guys. But with real estate, you do really need to be prepared for that. So learning what type of renters you're getting and learning how to handle that is going to be super important, which we're going to touch on a next project next month. And then coming up next, we did a Phipps Brittain flip, baby. We did a Phipps Brittain flip. The thing that I'm really struggling with, Matt, is the difference between projects that we even started 6 months ago and what you're getting now, totally different. We're looking at like 50 to 100K difference in similar projects. So some of the projects that we started, towards the beginning of this year and that we have recently closed in the last 2 or 3 months, great examples. We'll take you guys through some next week or next month. But getting some context on more recent deals like our triplex and our fourplex we just firmed up on in downtown Kitchener, I think will be a much better representation of what a current market deal would be like. And then we'll also talk about duplex conversions and garden suites. So correct me if I'm wrong. Our guys up in Barrie, they just put the garden suites to bed. I heard there was some changes coming up to the Barrie market. Hopefully they don't come down our way because we're seeing a ton of opportunity in garden suites. Clients of ours and personally, we're looking at putting garden suite units in some properties that we hold. Also looking at purchasing other properties that could be converted into a duplex and then throw a garden suite in the back. I think there's a ton of benefit for that. And I think Waterloo region is welcoming those types of units because they need more units. Just an important note to the listeners. Kitchener, Waterloo, and Cambridge are 3 different cities. That means 3 different sets of rules.
Yeah.
So just be very, very cautious. If you are, listening to this or other videos, like they're different cities. So if you buy a property on the Waterloo line and you're looking, everything you've been listening to or reading about is in Kitchener, does not apply. Different cities, they are just attached. So One reason why we really like Kitchener is the zoning and how easy it is to deal with their permit and building department. They have a 10-day guaranteed response. So if you submit your permit application and it's good, it's done properly, you have to get a response within 10 days. But if they approve it after that 10 days, fantastic. Just a little tidbit here, where most people make their mistakes with the permitting process is it's not airtight the first time. You send it into the permit office. They have to get back to you within 10 days, but they don't have to get back with revisions. So you send in a permit app and it's not perfect. They ask you for revisions. They don't have to get back to you within 10 days. So then we see a lot of people that have been like, man, I don't want to do another project where I have to get a decent sized or a big permit done, either add an additional unit off the back or do a full duplex conversion because I was waiting forever for the building department. And the reality is you can get rid of all those problems if you just submit your permit right the first time. That's a big thing with the duplex conversions and the garden suites. Time. As an investor, you can't be holding on to dead units, doing nothing with them, just waiting for somebody else. It takes too much time.
Yeah, absolutely. And having your ducks all in a row when it comes to the permitting process can definitely make for a much smoother experience than if you end up having to go back with multiple revisions.
The ducks in a row, I used to hate that saying, but it is so, I use it all the time now because you just need it. You need it or you're going to be wasting time. One little plug here, Matt. We're going to hold a small investor event at a project we just firmed up. This is a duplex conversion in downtown Kitchener, close to Midtown Waterloo. We've invited our clients. If anybody that sees this video, we're hosting this later in October, early November. We've converted this is a classic project in Waterloo region. All brick bungalow, duplex conversion. We ended up flipping and selling it. We're going to go over, walk through the whole property. We do it everything by the book. You're doing your separate meters, you're doing your separate kitchens, you do laundry in each unit. We got the right ceiling height, got the right egress window. This is done to the T. So we're going to be bringing everybody through the permitting process, how we renovated it, why we did specific things. A few of our clients that have already invested with us or with other projects that they've done on their own, and some other clients of ours that have expressed interest in investing in real estate, friends or people that have been successful in their first and second purchases. We'll be walking through this property as well. Really good opportunity for anybody that wants baseline numbers. I find a lot of questions that we're getting from investors are how much the renovations cost, what are you able to rent it out for after, what's that area like? Those are really great questions. And this is a good starting point for what a baseline would be, right? We did just sell it. So we'll share, a little bit more on the details in the next video after we hold our event. And then we'll break down the triplex and the fourplex as well. I think those are great starting points for people that are either, looking for their first project or kind of, done one or two and looking to take, another good step without biting off, let's say a big fat 10 multi-unit.
Yeah, really appreciate you breaking that down for us, and definitely encourage anyone at home watching this. We'll have a link in the video description down below to the actual event that Zach's talking about. And if you guys are in the area, you're thinking about becoming an investor, these really are such important events to attend. There aren't as many in-person events these days because of the COVID era, but I really encourage you guys to, take advantage when there are these events.
This is something we really got away from. Obviously, due to COVID, we want to respect how people are dealing with that. Everybody deals with it differently. But now that restrictions are a little bit more lax, and obviously we're more comfortable with it, we think it's a super powerful way. When we first started getting investing, we went in, head first. You buy a property you think is a great deal, and you're like, I'm going to single family flip this thing, and I think I can do it for 40 grand or 50 grand, whatever it's going to be. But as we've got a little bit more experience and we've been able to provide more value, we've connected with other investors and been able to say, oh, well, these guys are saving on this, or, oh, we didn't know about, how to configure the kitchens and the bedrooms to get a little extra squeeze out of it. Those little things have really helped us really kind of make our duplex conversions, they've been our bread and our butter for the last 3, 4, 5 years. Now that we're looking for other things to add value, a duplex conversion is kind of the baseline. Okay, can we add an additional unit off the back? Can we put a garden suite in? Should we just look at triplexes and fourplexes that have, purpose built on bigger lots so we can go build our own? Like, these are the types of projects that we're really looking forward to. We think they offer a ton of value and they give you more control as an investor. Having a little bit more control over it is huge. It can protect your downside. Number one rule of investing is not to lose money. When we're buying a project like this, we want something that's a home run. Can we lose money? If not, then we're interested.
Yeah, really appreciate you sharing that perspective here, Zach.
Yeah, awesome. Floor is open to questions, Matt. I know me and you had a good conversation, obviously, before we hopped on. But I'm super active on our social media, and I'm going to be super active in the comment section of this as well. So I encourage people, please leave a comment or reach out to the contact information directly. Canadian Real Estate Channel is going to have everything in the description for us. Reach out to Matt or myself. We have all our links to our website as well that we'll be updating with either new listings or our projects as we can share our numbers. Obviously, we have to wait for projects to close to update our projects. We can't be getting rid of information before they're done deals, but it's going to be a good way for us to stay connected. And we really are an open book. We've really followed the lead of this channel and decided to share a lot more open content about our projects. And I think it's a great way not only to connect with other investors, but to learn. I think that's a big mistake that a lot of people kind of fall into the trap thinking they know everything. Me and my team and Matt and Derek, we're trying to get as much information as we can. It's only going to help us be better investors, right?
Yeah, well, really appreciate you sharing your expertise and insights on this episode. And again, looking forward to shooting additional videos and being able to explore some of your upcoming projects. If you guys have a question for Zach, jump in the comment section down below. Really do encourage you to participate. And otherwise, if you guys are looking to invest in the Waterloo, Kitchener, Cambridge areas, you want a local expert like Zach, someone that's actually being an investor that knows what's going on, that's staying on top of these things. Because again, as we mentioned earlier, things do change relatively quickly in these local real estate markets, both from a pricing standpoint, but also sometimes from a rules, regulations. And again, we've covered in the past, those garden suites in Barrie were a huge opportunity, but recently there's been significant changes to those bylaws. And if you're not in the loop on these things, there's potentially hundreds of thousands of dollars at play here. So really important that you have a local expert like Zach on your power team as a real estate investor. We'll have a link in the video description down below to all Zach's contact. Thanks again, Zach.
Looking forward to it. Thanks, guys.